Good afternoon, everybody. Thank you for joining us this afternoon. We'd like to take you on a journey that we're currently going down. I think it's the early stages of the journey. It's really about a collaboration between various parties, being Standard Bank, Transactional Capital, and of course you, our clients. This is about a strategic decision that the bank made to involve our clients as early as possible in any of our innovation journey. So as you will see, we've called this webinar Project Maximus, which is really a project name. It's the early stages. We're in development. We are conceptualizing ideas, and we really need your help. The name and the exact outcome of this is right there, willing to be and ready to be shaped by all of us. So I think the idea being that what we want to do in this session is really to show you our thinking, get some of your thinking, and we'll talk about how we can collaborate with you going forward down this journey.
We are proud that and we are happy that Transactional Capital has agreed to partner with us in this space of really navigating and building this platform business, wherein they will also have an opportunity to put their wares or their solutions or their products and services on our own platform, and as well partner with us in building more that our clients need on those platforms themselves. Standard Bank's relationship and partnership with Transactional Capital cuts across many fronts. On the one hand, we are a key banker to them and provides them with the solutions and the funding they require to build on their business. And during the time that we are in, they have managed to do a lot more because we have partnered with them in the funding of some of the transactions that they wanted to do, and also in their ability to access the market as they continue with their business. And these initiatives have actually strengthened the relationship that we've built thus far. In building our platform business and inviting them to participate in that platform, in bringing some of the expertise and some of the innovations they have long built, it then enables us to offer diverse solutions as well as innovative solutions that both our clients need and are yearning for. We are very proud to be a partner to them, and we continue to hold them as a strategic relationship and a strategic client to us. And we believe that we have shown the strength in navigating these challenging times together, and we continue to do so and develop together.
Really what we've been doing in the South African economy is collating data for about 20 years on different segments in the market to allow us to then use that data together with artificial intelligence and analytics to enter into new and exciting sectors of our market. What's very important about Transactional Capital Risk Services, or TCRS, is that we have a huge exposure to consumer-facing businesses in South Africa. First of all, we have this exposure is divided across various sectors. Our biggest sector would be Tier 1 banking, where Standard Bank is a very big client of ours, but then also specialist lenders, the retail sector, public sector, things like SARS, where we're collecting on rates and taxes, or in the old days, SABC TV license, or rates and taxes for municipalities. We collect for telcos, we collect for insurers. So we have a very broad exposure to consumers. We estimate that we collect from about 15 million South African consumers, and there are only, I think, about 27 million credit active consumers in South Africa. So we are focusing on those in distress. We have built a huge database of consumer credit information. So number one, because we collect from all these different corporate entities, who does the particular consumer owe money to? So everything is driven by identity number. So when a matter comes into, a matter would be a matter that we need to collect on or make payment on. If that identity number comes into our environment, we could then check who else does this individual owe money to. And from this, we build a profile, person by person, built up from the individual right up to a portfolio of 15 million people, as to their ability to repay and their propensity to repay. And this then allows us to have a very informed interaction with that particular individual. What I'm going to show you here now is a video of Pretoria where our minibus taxis drove in a 24-hour period. So I took 1 day's worth of data that we capture, and we've compressed this into 30 seconds just to show you how many data points we pick up. So if you're looking at the screen now, it's only 3 in the morning. Victoria wakes up at about 5 in the morning, which is now, and you can see thousands of minibus taxis driving up and down the roads of Pretoria. And every time they drive, we are picking up information about them, where they're driving, how fast they're driving, when are they stopping, which means they're picking up and dropping off passengers, what time they drive, what time they don't drive. And you can see now the city slows down and it gets a bit quieter. So you can see from this how much data, just if you look at just at the city centre of Pretoria, how much data we pick up every day. And of course, when you expound that over South Africa, you can just imagine how many different data points. The last thing which I think is really important is this Consumer Credit Rehabilitation Index that we have, which really measures the consumer's ability to repay on his debt. This is a really interesting index that we run. Every quarter, we take 4 million individuals and we score through all the data that I spoke about their ability to catch up on their arrear debt. So it is highly, highly representative. And what we've seen is that we've been running this index from the third quarter of 2017, and the index has kind of moved around, I would say, sideways, slightly downwards, over, from Q3 17 all the way up to Q4 19. Up a little bit, down a little bit, but over the last year, more down than up. The interesting thing is in the last 3 quarters, COVID really has placed a significant amount of stress on the consumer, and how much more so does it make it important in this environment to have information about your consumer client as to where he's employed, how he's employed, is he able to pay, how much debt does he have, can you contact him, etc., which we are able to now utilize through this Project Maximus and our Master Data Universe to be able to provide really informed verification to people like you around their consumer client base. I wanted to thank Standard Bank for hosting this webinar, but also for collaborating with Transactional Capital in building this really exciting project, which can only bring positive results for everyone, for Standard Bank, for Transactional Capital, but most importantly, for you. Thank you very much.
I think as a departure point, it's really important to mention the industry has gone through an incredible amount of regulatory change, and most of that change is aimed specifically to try and better protect the consumer. But we haven't seen a lot of innovation and change to better protect the collector, the customers in this regard. So quite literally, this idea was conceptually born from that departure point in what is it that we can do to potentially better protect the cash flow commitments from our collectors. All right, and I think as a starting point, it's fairly common for most collectors to collect paper artifacts, including copy of ID, passport, driver's license, and so forth. So at least we know who we're dealing with. That usually gets extended into things like a copy of the payslip, bank statement, and so forth. So at least we have some level of comfort into the sources of income, affordability, and so forth. That's usually also overlaid after the onboarding process with contact details and how to get hold of the consumer after the fact, so typical cell phone number, proof of residence, in most cases also the physical address of the employer. And lastly, some of the collectors will dabble into the world of credit bureaus, credit scores, trying to get a level of risk appetite, looking into payments histories and so forth. I think the industry is very comfortable with a product called account verification or account holder verification. That's usually the first protocol, and that's nothing new. The whole industry uses it. Most banks and ourselves offer that to the market. But typically one of the shortcomings in that service is it literally only tells you that this guy's bank account is linked to his ID, the account is open, and you can run debits or credits on it. What it does not do, it doesn't give you insight into sources of income, as I've already alluded to. Some of them provide some of this data, others provide other pieces of it. But the point I want to make here is it's very difficult for our collectors or the customer that's joining us today to know exactly Bureau 1 is really good in areas 1, 2, 3, but not that good in area 5 and 6. So one of the first things we intend to design, and we actually done huge parts of that work already, we've built a single interface out to our clients, but in the background, we actually offer them a bouquet or a suite of the credit bureaus, and we've literally taken the top pieces of data that's the most accurate and relevant from all of them, and we provide that back as a single piece of data back to the collectors. It effectively combines independent data sources, actual transactional data sources, and of course, donkey's years of intellectual capital, know-how, and savvy on just how to effectively run at the very lowest cost a successful collections book, ensuring the highest possible cash flow return. If you've got really smart data that's validated with a bit of this intellectual capital overlaid on top of that, you've got a very high probability of just running a normal debit order, which is really cost effective on the 23rd of the month, as opposed to if you don't have all of that data, you would probably default into something like NADA or debit check, which cost quite a bit more, and then still pay for a few days after that to track, because the only reason why you would do it is you don't have perfect data. But that's typically the end game we see. If you have better data, you can probably get away with more cost-effective collections mechanisms. Or potentially it could also show you the other way. If all of the data that comes back is actually not validated and we don't have a good sense of data matching, then probably we would also advise you to use the bit more advanced collection streams, because that will almost guarantee then the best success rate. So it actually goes both ways. Let me start off by saying a huge appreciation to Standard Bank, and quite a few of your customers have indicated their appetite to be early adopters, and we're actually already testing with some of them. And that's literally the first step of this journey, to get beta testing partners to physically validate their real world data on consumers. We obviously run it across all of these sources, overlay it with some of our own intel, and then we pass the validated results back to those customers. And then importantly, between Standard Bank and ourselves, we then jointly interrogate that results with the customers to work out what are the learnings, what can we tweak or change, how can we add value to a simple, unintelligent parameter like a no answer to potentially a no answer with a medium, high, low indicator with a propensity of more than 50% to still be successfully collecting money from this individual on the 27th of every month for no more than 400 Rand. If I explain it in a practical sense, the next phase of the project will then focus on taking some of the artificial intelligence and the hard yards we've learned through our managing difficult consumer books, and will then overlay that over the data. Plus, of course, we'll actually use some of the customers that's on the beta testing journey with us to co-design the next phase of potentially what else would they like to see, how would they like it presented back to them. And that will then be incorporated into our minimum viable product 1, which we intend to commercially release to market in Q1 next year.
I think, we've got a various number of options in terms of how we will be delivering some of these solutions in terms of conduit with a transaction capital into our client base, and then bundling it with a number of different solutions. But from our point of view, we understand who the technology partner, the insights come from, which is Transaction Capital. We are looking to bring this to our clients as Standard Bank, who obviously trust us and have got a relationship, and we're looking to funnel and be the conduit into Transaction Capital in terms of this solution.
Most of this data will be produced through Transaction Capital and Credit Health. Any data that is stored has to be stored and be POPIA compliant, and we do comply with everything from a POPIA perspective, and we've got our own compliance department to ensure that all the time.
We need to put in place a set of technical distribution points, and we've done that in the form of what we've called Standard Bank One Hub platform. But essentially, this is our distribution point that allows us to facilitate delivering our capability in the form of APIs to our clients' development teams, but also connect partner APIs. So in the case of this scenario, we would be connecting the APIs that Ben and the team would build to provision this data into our One Developer Gateway for the consumption of our corporate clients. Equally, we would do the same thing for any front-end solution where we would link it into our One Hub platform and launch it by using a single sign-on so that we launch into the transaction capital environment. And that then provides you with sort of a single entry point that's authenticated and can securely launch out multiple products to mimic walking into multiple different shops in a shopping center.
Definitely the industries where consumers don't have access to the product if they don't pay for it, their success rate is still at an acceptable level. But where we have products and services where the consumers already consumed it and now they have to pay for it, that's where we start seeing an increase in the unsuccessful rates and also the dispute rates.
To bring a solution to our client base that helps their collection process through data in an ever-tightening world in an environment, we realize that specialization through fintech, through a data source, is more and more required. And the collection JV and the partnership with the likes of Transaction Capital makes absolute sense. And as you see the platform bank rolling out, these types of partnerships to provide unique specialization that will provide the client base, and we both bank a lot of the client base together, with something that is better than what we currently have, will become more and more of our norm on a day-to-day basis. Then as a bank, us trying to provide an end-to-end internal solution.
We are in a unique position as TC together with Standard Bank that we do these transactions at scale. We engage credit bureaus at scale, and therefore I'm very confident that the joint economies of scale of the two parties will greatly benefit the customers if they compare what they currently do on their own versus potentially this all-in-one solution when we take it to market.
Thank you all very much for your time. We appreciated you taking out a large piece of your day and sitting in front of a computer screen. It's really important to us that you're involved early on in this journey, and we're looking forward to sharing more with you as we carry on.